Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York. Markets have just closed for the day. The market giveth and Janet Yellen taketh away. We saw this market under some real pressure over the last couple of days. 18,000 kind of seeing up top in the market. That was right here. This, of course, being a weekly chart, you can see that. And then over the last couple of weeks, of course, we noticed that we saw some real resistance come into the market. That, of course, affected our current trade in that we continually trailed our stop up and trailed it up to a point where it did pull us out with a pretty good profit today. We'll talk about that in a second. But first, Dow Jones Industrial Average off 158 points to close at 17,730. That's the last 17,708. That's the low on the day, and the high 17,901. So we're absolutely closing just off of the low on the day. Now, about the only thing, and we talked about this a little bit, we just got done with the gold forecast, but about the only thing that did close higher today was the dollar, trading up about 0.2%, but it is at 100. And the question is, we talked about the fact that this is real resistance in this area at the 100 mark, just above it, and whether or not it's going to be able to sustain and take that out. Of course, Yellen coming out, and really the consensus at this point is that a rate hike is pretty much in the bag. It's pretty imminent. The probability of the Fed announcing it, and especially with the tone that we heard with Yellen today, I would say is 90 to 95%, although analysts are putting it at about 75%. But my sense is that it's pretty much in the bag unless we have some really unforeseen activity within the marketplace itself. Now, that takes us to our current trade. We went long the Standard & Poor's 500 vis-a-vis the E-mini at roughly 2023. Now, as the market trailed up, we continually trailed our stops higher. And what, in essence, we were looking to accomplish was to lock in as much profit as possible, but if the market, or at the point that the market was going to come down, we would knock ourselves out with a profit. And so what we did just the other day, we had our stop sitting here at roughly 2058, and that was based upon this 200-day moving average right here. You can see this is the 200-day, this is our 50-day moving average, and that was really our trigger. We got in on this candle. This is a daily chart. We got in roughly right in here, 2023, so in this area, and we rode this market up. Now, we continually raised our stops higher and higher, and just the other day, I moved the stops to just below these series of lows that came in. This is 2080. This is where we are currently at. And we moved our stop to just under 2078. Well, when we look at the low of today, we can certainly see, and let me go ahead and pull that up really quickly for us. But when we look at the low of the day on the Standard & Poor's, you can see that it hit a low of 2075. So we're currently at 2079. Our stop was below 2078. So we were certainly stopped out of the market. That's really the long and short of it. Market trading down or off about 20 points. But considering that we got into the market at 2023 and we got out of the market at 77, it gave us a profit of roughly 54 points. Now, 54 points times on the E-mini, of course, times $250 per point is a profit of about $18,270 per contract. Margin requirement, even if you double it up, it's 22,000, but a single contract is sitting at around 11,000 per contract. So in essence, you pulled out about $150, $160 profit on the trade. That's not too bad at all. We're flat in the market. We want to see how this market weathers out this most recent talk by Yellen, and if we will see further downside or if we will return to rally mode. For right now, we got in at 23, out at 77. We're flat the market with about an $18,000 profit. This has been Gary Wagner, wishing you, as always, good trading. We certainly got that this week. We'll talk to you tomorrow for another daily update and review. Bye-bye.